What if I told you there's a war for the future of money and you're the target? It's not a war fought with armies. It's a silent, invisible war being waged on the servers of the world's biggest financial institutions. Big banks, Wall Street giants, the same ones who told you for years that crypto was a joke, a scam, or rat poison squared. You remember that, right? They blasted that message far and wide, creating a smokescreen of fear and doubt. But while they were telling you to stay away, what were they doing behind closed doors? They were preparing, building, and now they're quietly pouring not just billions, but hundreds of billions of dollars into the digital asset space with their eyes on trillions more. Why? The answer should send a shiver down your spine. They aren't just trying to get rich, they're rewriting the rules of finance to lock in their power and lock you out. They want to turn the revolutionary promise of crypto into just another one of their controlled markets. But they have secrets. And today, I'm leaking the seven biggest ones they are praying you never find out. This could be the difference between you becoming their exit liquidity or you front running them at their own game. Let's get into secret number one. The first secret is the most shameless. It's the one they hope you forgot. For years, the most powerful voices on Wall Street publicly mocked crypto. They called it a bubble, a fraud, a tool for criminals, generating headline after headline designed to scare the retail investor away from a worthless digital fad. Think about it. We all heard them. The message was unified and clear. This isn't a real asset, it's dangerous. Stay away. This wasn't just random criticism, it was a coordinated campaign of doubt. While you were being told to sell or stay out, these very same institutions were launching blockchain divisions, filing patents, and hiring armies of developers. JP Morgan is a perfect example. Its CEO famously trashed Bitcoin, yet behind the scenes, the bank was building Onyx, its own blockchain platform for massive digital transactions. Today, they offer crypto services to their big money clients. Or look at BlackRock, the largest asset manager on the planet. After years of showing little public interest, their Bitcoin ETF became one of the fastest growing ETFs in history, pulling in tens of billions of dollars in assets. It's estimated to be generating well over $200 million in annual revenue for the firm. Why the public hate followed by a massive private invasion? It's a classic Wall Street move. Accumulate in silence. They needed to keep prices down and competition low while they built their infrastructure and got their positions ready. They created a smokescreen so that by the time you felt safe enough to get in, they already owned the front door, the back door, and all the plumbing in between. The idea that they were just being cautious is a convenient lie. The reality is they were strategically killing retail enthusiasm to give themselves a head start. They weren't just watching the game, they were waiting for the right moment to buy the entire stadium while telling everyone else the sport was doomed. You watch the price of Bitcoin or Ethereum on your phone, you see it go up, you see it go down, you think you're seeing the market, you're not. You're only seeing the retail market. Secret number two is that the huge majority of institutional crypto trading is completely invisible to you. It happens in a shadow financial system called over the counter or OTC trading. Imagine you're a hedge fund wanting to buy $500 million worth of Bitcoin. If you go on a public exchange like Coinbase and place that order, you'd instantly cause the price to surge. The order book is just too thin. You'd be fighting against yourself, driving your own entry price into the stratosphere. Retail investors do this all the time without realizing it, paying more than they should. Institutions don't play that game. They just call an OTC desk. These are private trading firms that broker massive transactions. The fund says, I need $500 million of Bitcoin. The OTC desk then quietly finds that Bitcoin from different places, miners, other institutions, private whales, and completes the trade at a fixed negotiated price. That $500 million deal never shows up on a public order book. It doesn't move the price on your screen one bit. It's a ghost. Why keep this a secret? Because it lets them build enormous positions without anyone noticing. While you're watching charts and getting faked out by small price swings, they are moving sums of money that dwarf the entire daily volume of most public exchanges. They can build a massive long or short position in total stealth. Then, once they're ready, they can make a move on the public markets that starts a cascade, forcing retail investors to either panic sell or FOMO buy right into their trap. They're operating with a complete map of the ocean while you're navigating with a tourist guide to the beach. Secret number three is about how Wall Street is turning crypto from a simple asset into a complex, high stakes casino where they own the house. They're doing it by building a monstrously large market on top of crypto, the derivatives market. To most people, crypto is about buying a coin and holding it. To Wall Street, that's kid stuff. Their real game is in futures, options, and perpetual swaps, complex bets on the future price of an asset without ever owning it. And this market is exploding. The crypto derivatives market has seen staggering trading volumes, at times reaching nearly $9 trillion in a single month and making up over 70% of all crypto trading. Now, derivatives aren't automatically bad, but here's the secret. They are designing this market for themselves. They're using their expertise to create products and strategies that are basically impossible for the average person to use. Think about high frequency trading, HFT, where firms use supercomputers and private data lines to make thousands of trades a second. They aren't investing, they're just exploiting tiny price differences faster than you can blink. It's a game of pure speed, and if you don't have a billion-dollar setup, you can't play. They also use these derivatives to bully the main market. Let's say a fund wants to push the price of Bitcoin down. They can take a huge short position in the futures market and then dump a relatively small amount of actual Bitcoin on the public spot market. This triggers a wave of liquidations from over-leveraged retail traders, creating a downward spiral that makes their futures bet incredibly profitable. Wall Street is creating a version of the crypto market that looks a lot like the system that led to the 2008 financial crisis. Opaque, highly leveraged, and dominated by a few players with an insane technological advantage. They sell you the dream of a decentralized future while building a hyper-centralized casino on top of it where the house always wins. This might be the most cynical secret of them all. For the longest time, the crypto world was terrified of government regulation. But Wall Street isn't. In fact, they love it because they know they can write the rules. Secret number 4 is that Wall Street isn't fighting regulation. They are actively shaping it to help themselves and crush the competition. Do you really think it's a coincidence that after years of regulatory chaos, major crypto-focused bills and frameworks are suddenly getting fast-tracked? This is the result of a massive lobbying effort by institutional giants who want to create a safe and regulated crypto ecosystem. But what does safe mean to them? It means high barriers to entry. It means rules that require expensive licenses, huge compliance departments, and cozy relationships with regulators, all things Wall Street firms have and small, decentralized projects don't. The legal fees, the capital needed, the reporting burdens, they are designed to be manageable for a Goldman Sachs, but totally crippling for an innovative DeFi startup. They are using regulation as a weapon to de-risk the space, which is just code for cleaning it of any real disruptive competition. They're essentially telling the government, crypto is wild, but don't worry, just put us in charge. This is a classic move called regulatory capture. It's when an industry gets so powerful that it basically writes its own rules, using the government as the enforcer. This is Wall Street's superpower. They position themselves as the responsible adults who can bring order to crypto. The result? A regulatory framework that cements their dominance, gives them a government-approved monopoly, and makes sure the future of digital finance looks a lot like the past, controlled by a handful of powerful gatekeepers. They didn't want to kill crypto, they wanted to tame it, and now they're building the fence. We're just over halfway through. If you're starting to see the bigger picture, do me a favor and smash that like button. It helps get this information out there and fights back against their story. Now, let's get to the real endgame. Get ready, because this next secret is where their plan goes from controlling crypto to controlling everything. Secret number 5 is the Trojan Horse of tokenization. You're going to hear this word everywhere. They'll sell it to you as a miracle. The ability to own a tiny piece of anything, a skyscraper, a famous painting, you name it. On the surface, it sounds like the democratization of wealth. That's the cover story. The real secret is that tokenization is Wall Street's master plan to bring every asset on Earth onto blockchains that they control. Right now, the total value of real-world assets, real estate, stocks, bonds, gold, is in the hundreds of trillions. It's a massive, slow, and clunky market. Wall Street's goal is to tokenize all of it, converting it into digital tokens that trade instantly 24/7. The market for this so-called real-world asset, RWA tokenization, is already taking off, with billions on-chain today and projections that it could become a multi-trillion-dollar industry. Institutions like BlackRock and JP Morgan are already leading the charge. Here's the scary part. What blockchains do you think they'll use? Do you think they're going to put the deed to every home in America on a truly decentralized network? Of course not. They are building their own private permission blockchains, networks where they control who can join, what can be traded, and who validates transactions. This is the ultimate betrayal of crypto's promise. Instead of using blockchain to cut out the powerful middlemen, they are using it to become the ultimate middleman for everything of value. Imagine a future where your mortgage isn't with a bank, but is a token on JP Morgan's blockchain, where your stocks are just tokens on a BlackRock run network. They would have the power to freeze your assets, reverse transactions, and blacklist your wallet with a single keystroke. It would create a level of centralized control that makes today's financial system look like a libertarian paradise. Tokenization isn't about you owning a piece of the Empire State Building. It's about them owning the digital deed to your entire life. It's the Trojan horse that lets them swallow the physical world into their new, perfectly controlled digital kingdom. Every economy needs a currency. The crypto economy is no different. For years, that role has been filled by stablecoins like Tether and USDC, but they've always existed in a regulatory gray area. Secret number 6 is that Wall Street is orchestrating a takeover of the very lifeblood of crypto, the dollar-pegged stablecoin. They aren't just creating their own, they're working with the government to legislate their preferred versions into existence. Regulatory frameworks, sometimes referred to by names like Project Yorktown, are being designed to create a class of regulated, compliant stablecoins, placing them firmly under the control of big banks and other approved financial institutions. Why is this so critical? Because whoever controls the main stablecoin controls the plumbing of the entire crypto market. They control the on ramps and off ramps between regular money and digital assets. It gives them a cut of almost every transaction and, more importantly, immense systemic power. Imagine a future where the dominant stablecoin is issued by a consortium of banks. They would have a perfect real time view of every single transaction in the crypto ecosystem. They would know which wallets are buying what, where money is moving, and who is taking on risk. It's the ultimate insider information baked right into the system. And these new regulated stablecoins will be programmable. This means the issuer could build rules into the money itself. Rules like this dollar can only be spent on approved items, or this dollar expires in 90 days. It's the foundation for a central bank digital currency, CBDC, but with a corporate Wall Street logo on it. Analysts project that a regulated stablecoin market could bring in up to $4 trillion in new institutional money. But this isn't about making a better financial system. It's about seizing control of the most critical piece of infrastructure in the digital economy. If they succeed, every crypto transaction you ever make will flow through their toll booths, be recorded in their ledgers, and be subject to their rules. This brings us to the final, most important secret, the one that ties all the others together. What is Wall Street's real endgame? After the smokescreen, the invisible market, the rigged casino, the captured regulators, the tokenization of everything, and the stablecoin takeover, what is the ultimate goal? Secret number 7 is that their endgame is to orchestrate one of the largest wealth transfers in modern history, and you, the average investor, have been cast in the starring role as the exit liquidity. Here's how the end game is designed to play out. They've used the last few years to quietly buy up assets and build their walled garden. Now they're ready to open the gates. You'll see a flood of positive mainstream media. Financial advisors who once warned you off crypto will suddenly be pitching you digital asset funds. You already see it happening, with firms like Morgan Stanley expanding crypto access to their wealthy clients. It will all be framed as the maturation of the industry, the safe, responsible way to get into crypto. This will kick off a massive new wave of retail FOMO. Millions of new investors will pour in, drawn by the legitimacy of names like BlackRock and Fidelity. Prices will soar, but this bull market won't be for your benefit. It's the final phase of their plan. As retail money piles in, pushing prices to euphoric highs, the institutions will begin to quietly sell. They will offload the assets they bought for pennies on the dollar to the wave of new buyers. And they'll do it without crashing the market using their sophisticated tools, their OTC desks to sell huge blocks privately, and their derivative platforms to hedge their positions. They will be selling into the very buying frenzy that they helped create. When the market finally turns, when the correction comes, who will be left holding the bag? The retail investors who bought at the top, lured in by the siren song of institutional adoption. The institutions will walk away with trillions, having successfully harvested the wealth of a new generation. This is the oldest game on Wall Street, just repackaged for a new century. They don't see Bitcoin as a revolution. They see it as the greatest speculative asset in history. And the best part for them is they got to write the rules before the game even officially began. So there you have it. The 7 secrets Wall Street has been trying to hide. 1. The great smokescreen they use to lie and accumulate. 2. The invisible OTC market where they move trillions. 3. The rigged casino of derivatives they built to always win. 4. The captured referee of regulation, used to kill competition. 5. The Trojan Horse of tokenization, their plan to put the world's assets on their chains. 6. The Stablecoin Takeover, to control the money of the digital economy. And 7. The endgame, where you become their exit liquidity. It's a grim picture. It can feel like the game is already lost, but it's not. The fact that you know their playbook is your single greatest advantage. The crypto revolution was never about just making everyone rich. It was about creating a transparent, open, and fair financial system. That ideal is under attack, but it is not dead. The answer isn't to run away, it's to understand the rules of this new game. It means being skeptical, it means knowing the difference between a truly decentralized project and a centralized corporate copy. It means investing with knowledge, not FOMO. And it means remembering that the most powerful tool you have is your own sovereignty. They want you to be a passive consumer in their new digital world. But the spirit of crypto has always been about being an active participant, by educating yourself, by supporting real decentralized infrastructure, and by seeing their moves before they make them. You can refuse to play your assigned part. You can refuse to be their liquidity. The war for the future of money is here. Now that you know their secrets, you have a fighting chance. Don't forget to subscribe and hit the notification bell. The more you know, the stronger we all become. Stay vigilant.